Looking at commodity as a theme today, Sonia, because with the US dollar decline, we're looking at all commodities actually trading in the positive, especially the non-agro ones. The dollar index is trading at a one-month lows. We've seen 110 give way on the lower side there. And the dollar index now is nearly 5% off its 20-year highs that was hit in the month of September. And the fact that you could be looking at lower, other currencies as well doing well. So the Chinese yuan has recovered. We've seen Canadian dollar recover, especially after that 50 basis points of an interest rate hike, even as markets were expecting 75 basis hike. So we have seen currencies also do quite better today. That has been supportive. Also, the fall in treasury yields is supporting the prices. You also are looking at the US Fed expectation that it may soften the hawkish stance by the end of this year. That is in December. There's now a 60% chance of a 50 basis point rate hike in the month of December. That clearly has been supportive as well. For today, markets will be watching out for the European Central Bank monetary policy as well. We also are awaiting the Japanese yen Fed policy, and you also have the US Fed on 2nd of November. So the next week, 10 days, also promise to be quite volatile there. Take a look at the commodities then, and the crude oil prices have continued to surge. We are looking at 4% of gains in this week itself. It has to also do with the record US crude exports at 5.1 million barrels per day is what has brought the prices to above $96 per barrel. Markets also will watch out for the OPEC and allies now effectively cutting 2 million barrels from the 1st of November. And there would be also on radar is the fact that the European Union may ban Russian oil imports from 5th of December. There also is conversation about banning or restricting Russian shippers from the global insurance industry there. Not just crude, gold is trading at a two-week highs. We've seen 1675 on that one. Silver has broken above $19.5 per ounce as well. You have copper prices trading at a six-week highs right now. Metals, for one, seem to be really doing good as a sector right now. So you have copper trading at a six-week highs, and the fundamentals really seem to have improved with the global inventories at just about less than 5 days of global consumption. Clearly continues to support copper. If you look at zinc inventories, you have 3 days of global consumption worth of global inventories. So the markets are wanting to take a look at the fundamentals right now. From the highs, we are still much on the lower side. But for the day, for the week, we are looking at some supports coming back into this space. For crude as well, while crude might be 4% up, but diesel or the gasoline prices, the petroleum product prices continue to be much higher. In the case of metal prices, while we are looking at 2 to 10% of a gain this week, the best of the gains clearly coming in for aluminum. That is outperforming. You are looking at lower supplies, lower inventories, demand picking up, and that clearly has been supportive for that too.
Okay, point taken, Manisha. It's a risk rally and it's helping commodities as well. Both expectations of a lower rate hike from the Fed.